Thank you so much, everyone, for joining us today. As you can tell, we have quite a topic ahead of us, funding startups. We probably could have a good half a day in terms of it, but we're going to try and summarize it within just 1 hour. So with that, I think I want to allow all of the panelists to introduce themselves. We'll start with Funsho.
Good afternoon, conference. My name is Funsho Allu. I work for TIA Capital. We are international institutional investors. I'm based in Nairobi, Lagos, and London. We're focused on multi-strategy investing across the continent, from venture capital at the most risky all the way to sovereign debt at the most conservative. And separately, we're building a small ecosystem, a physical one and virtual, in Nairobi, launching 2023.
Thank you. Hi, Jonathan Coker from Amani Capital Partners. We focus on supporting underrepresented entrepreneurs to capital and pipeline. And it's a great pleasure to be in Algeria today.
Awesome. So just by way of introduction, I'm Lavina, known as the AI mom, but kind of involved in the startup space as an angel investor, and I sit on 3 VC funds as well.
Assalamu alaikum, everyone. So my name is Morrad. I'm the co-founder of TAKADAO, which is InsurTech with Islamic Sharia compliance component. I was the ex-founder of the eBay of KSA UAE-based company, where we got acquired actually 6 months ago by the group IKEA. So I will share with you guys my journey and how to scale a startup in the region, inshallah. I'm from Algeria, based in Riyadh.
Greetings, everybody. My name is Debodun Osekita. I'm Nigerian, based in the UK. I run an investing community called the Stock Pickers Academy, which has over 5,000 members. I also run a blog on startups called Urban Founders. The key thing I'm going to be focused on is how to connect diasporan capital to invest back into African startups. My background was working as a trader in the city for about 13 years.
Good day, everyone. My name is SEGUN Cole. I'm the founder of Fund the Gap Network, a Pan-African network that connects local startups with venture capital across the African continent. I'm based in Lagos, Nigeria.
Okay, great. And with that, I think we're going to kick off with our first question. And I think our previous panelists actually touched on it a little bit, where we've seen a lot of investments within the African continent actually being raised internationally. Together with that, we've seen a lot of them being incorporated internationally as well. So just a brief sort of background or your thoughts, if you could share with us on that.
Forgive me, repeat the question, please.
So in terms of African funds, we seem to have raised a lot internationally, not locally, as the previous panel did sort of mention and allude to. So what are your thoughts on that?
Sure. First things, let's define what is a lot. I believe last year, Africa as a whole got about $7 billion in funding. That is a rounding error in terms of investment in the world. I'm sure everyone here is aware about FTX that went bust and 30-something billion dollars of value evaporated overnight. So the fact that Africa as a whole gets approximately $7 billion, I would suggest it's not a lot, it's a little and not enough. But to get to your question, it's also, I believe, unfortunate that the majority of those funding, the $7 billion, comes from North America, and very little from the diaspora, and even less from our high net worths on the continent. So I guess everyone on this panel would probably want to see are people putting their hands in their pockets and investing in the future of their youth and their land. That would be my comment. Funch?
I think getting more local capital in the market is going to follow the same path as getting more local money into the stock markets and getting local money into private equity. So when the stock markets launched in much of Africa, I guess decades ago now, the idea was that more and more local funds would flow into them and they'd grow with the enterprises they grow and they'll start to fuel the IPO markets. And that hasn't happened. And people sort of deploy capital and move money around locally based on the same reasons as they do that internationally. If it makes sense, you do it. If it doesn't, you don't. And so the reason why our markets are still, in fact, in many cases on a dollar basis, local African markets are smaller than they were 10 years ago because depreciation of the currency and because there's not enough enterprise value being created in the actual enterprises, the money hasn't really flowed there. Same thing happened in private equity. When private equity tried to raise capital out of local markets in the, I guess, mid-2000s to today, you haven't seen the the deployment of funds from the insurance companies, from the pension market into private equity because, to be honest, it really hasn't made as much sense as buying government securities. So the same thing kind of counts for VC. If people see good enterprises being created, exits happening, strong companies being built by smart founders who don't run off with the cash, then I think the local money will flow. But for now, there aren't enough examples, not enough capacity in that space for that to happen, and therefore people would rather, buy a few more acres of land by the coast or buy a few bars of gold or whatever it is. I think this is a displacement theory. That's my view, anyway.
Okay, and with that, I guess let's delve into two local perspectives, one from a startup and one from a from an investment perspective, in terms of your experiences from raising funds and what has that journey been like? And then, to you, what have your sort of startup founders experienced as well?
Okay, so you have to understand the challenges. First off, why don't we have a local investment community? And at the same time, why are startups being incorporated outside of their local communities? Two questions. So first, understand that the same LPs that the global funds are going after are the same LPs that the local funds plan to go after. So I'll talk about my work as well with the Securities Exchange Commission Nigeria, where I'm part of a working committee where we have been tasked to provide practical developmental regulation on angel investment and venture capital in Nigeria. So one of the things that we're doing, right, is first of all, investor labeling. Who's an investor? And who should be investing in the local VC ecosystem? What are the funds available that they can tap into, startups can tap into to be able to raise funds? And also what I call VC education, right? And I'm very happy because globally now you're seeing the likes of MasterCard, SeedStars, 500 startups, Techstars, all doing venture fellowships. Now there's a lot of education going into, if you want to become a venture capital, how do you start? Where do you start from? So these are things that are already being practiced and done in Nigeria in the areas of venture capital education. And in that way, you increase the pool, pipeline of aspiring VCs, local investors that know where to put their money. So in every area I find myself, just ask people, if you want to invest in the African tech ecosystem, what's that platform? Where do you go to? Where do you start from? And you're just going to see silence in the room. And until we begin to address that, then we might not be able to make much progress. Second question, startup incorporation outside. their local ecosystems. A lot of African tagged startups are actually incorporated in Delaware in the US. Why? Right? But another thing you need to ask yourself is, what are the VCs, the investors, what are they seeing as barriers in Africa, right, that they now make it mandatory for African startups to be incorporated outside Africa? So, first off, VC entry, VC exit. Is it easy as a VC to enter the African market? Is it easy for them to exit the African market? And when I'm talking about entry, not just as a VC, but even their investee firms, right? 2, the legal system. Do our cuts, do they work? So copy from what Brazil has done, arbitration of VC, to cut out a lot of delays. And the bureaucratic system, how easy is it for a startup in Africa, for example, to obtain a license? Yeah? Even in fintech, where we've made a lot of progress, how easy is it for a fintech, an African fintech, to obtain a banking license? So these are the hurdles, because everything is associated with the cost. And these are the hurdles that VCs, foreign VCs, see, and they just say, look, we want you to incorporate in the US because we don't want to go through this stress. And you talked about exit as well. Where are the exit opportunities? Is it in the areas of the VCs, their investment being bought over by management, or their shares being bought over by a local, a global institutional partner, or maybe voluntary liquidation? So where are the exit opportunities? IPO, where are they? So I think these are things that we should address as well.
Awesome. Thanks so much for that, Morrad.
So I'm going to just recenter the thinking between the two panel and this panel. Actually, the center of everything is really the entrepreneur, okay? For me, when I first started my startup in UAE, I didn't care to be on the gray area, to be honest, okay? Because if you start building a company and thinking about what the rule and regulation are, just don't. Just sit down and do nothing, okay? So I was most of the time on the gray area, all the time, I would say. So I would just go get the license from the UAE authorities, and I would open an e-wallet 10 years ago when it was completely illegal. I would open a license outside of the UAE to be able to raise money and capital. By the way, when I was back in the UAE and KSA, we had like 2 VC funds, and we complained about having maybe 200 funds now in Africa. Come on, guys. So there were no VCs, not because the Arabs and they are loaded of money. Trust me, it was more difficult to raise money from the Arabs because they believe in building beautiful Sheikh Zayed Road by the time than investing in tech company. So for me, when I had a discussion with like a tycoon or somebody who has money, after 2 minutes of speaking about tech, it was like, but where is the building blocks? Where, you know, it was very hard. It's like milk from male camels, to be honest. So I suffer, okay? And you had 2 VC firms at the time, okay? And trust me, if you had a fight with one, you would be dead with the other one. Okay, so the thing was like, how do I go and get and raise money among the people who don't understand tech? Okay, so I would go and explain the case, what was I was building, and so on and so forth, and really reaching out to people from the region, but also from outside the region. And back then, my LinkedIn account was like my 2 followers. So how could I raise money? So I was reaching out outside and make things happen in a very tough entrepreneurship segment in UAE, okay? So, thanks God, after a few years, the like of Meltu, the company I used to own, Karim, Fetcher, we all made it. And trust me, Fetcher and Karim, they were every week in the same office discussing on how much time do you have to live on. That was the question, because nobody wanted to invest in us. So what was amazing is that the ecosystem actually was building the government was kind of supportive by closing one eye. That's all we wanted. Just close one eye and let us do our job. okay? And not on silo, side by side. I don't believe in that thing, you know. Let's just work, let us do our things. When you build a critical mass adoption to your product, then you can go and say, hey, you know, now you have to regulate us. That's the way you deal with the government. Don't ask the government what they can do for you, but ask what you can do for them, actually, if I may take the Kennedy statement here. But that was the thing. So we were like really pushing the boundary, pushing things, and making people believe in us, the human being that we all talk about. Like, can he pull this up? Can he make it happen? And at the end of the day, I got the milk from the male camels, you know, and they started investing in me. Okay? And it was not as they say, I don't understand, but I see you passionate, take the 50K. Okay? And that's what, you know, happened. The good thing also was that the government impact was that when they see us actually shaking up things, they start to say, what can we do for you? But don't ask money to the government. Why do you have to ask money? There's plenty of people putting. So they were like, we can give you this hotel, this venue, these things, and you will be all sponsored. And that was the way we were approaching that. Of course, the like of 500 startups, when they used to come to Dubai, they're like, why should I invest in this region? I don't get an exit. Why should I do that? And that was the worry. But, you know, alhamdulillah, we started from really grassroots, making small meetings. And I think Algeria, come on, it's a nation of a lot of millionaires, you know. There's so much resources. So the entrepreneurs should go and knock doors to the family office and stuff like that. Likewise to African. We complain so much about the government doing things. We should go and knock doors. I was spending 80% of my time chasing people who have money to believe in what I was doing. And 90% of the time I was on the gray area, sometimes black even. So and we made it happen, and we bypassed the thing, and that's, I think, this is what we should give to the entrepreneur, pushing them.
Thanks so much for that, and I think it's a good reminder, whether we're in Africa or anywhere else on the globe, we face similar challenges just being entrepreneurs. So, you know, with that, I guess we've gotten a good understanding of some questions. We've got a good understanding of, like, you know, from an entrepreneur's perspective. So I guess, you know, the next sort of phase that we'll go into is really around what are some of the best use cases that we've seen to date on the continent from a fundraising perspective that has worked well, and possibly why they have worked well. And I'll give it to Jonathan to start.
Actually, I'll pass this to Debodun over there,
okay,
because I think he has an interesting model.
Okay, cool.
Yeah, I think we saw in 2015, this is 7 years ago, there was a company called Hotstop. Apple bought them for $1 billion exit, and they were based in Nigeria. I don't know the details as to following their journey up until that point, but I think it's very important to take stock of the fact that that's happened and use that as a benchmark to say how many more of those unicorns can we get, because Apple acquiring a company, a startup from Africa for $1 billion inspires a whole new generation of entrepreneurs on the continent and lets us know that there's spotlight now on the continent, and that in itself happening 7 years ago, we need to be asking ourselves, have we done enough over the past 7 years to create the right environment for another aspiring entrepreneur to be able to exit like that? And have we actually taken the lessons or the positives from the journey and tried to see how we could leverage that with existing startups as well? And I think one thing I'm very passionate about is making sure that the diasporans who can get involved relocate back to Nigeria, to different countries around Africa, to be based locally, and then to leverage their contacts all around the world, from the business schools they might have attended, your Harvards, your MITs, and how they can leverage that back, come back to the continent, build, and then leverage capital both locally and internationally.
Great, thanks so much for that. JC, you want to add something?
Sure. I guess I have a very personal view of this because it's effectively my day job is raising capital for young entrepreneurs. I guess I'll give two very different example or case studies. One is a Nigerian dating app called True Flutter. It's growing rapidly, 30% month on month. But I remember the very first conversation in March last year where they had a proof of concept. They were doing 5,000 Naira a month in revenue, which back then was $40 or something like that. And one could see that very bright, very bright chap. And he was requesting my help in raising, I think, $50,000. After being able to spend an hour with him and understand his USPs, how he'll use technology, and how a dating app as a description does him a disservice. It's actually trying to break the modalities of how do you find a partner with all the traditional constraints that you have, social and all that stuff. I told him there and then, we'll raise you 150 and we'll do it in 3 months. And as of now, I think we're knocking on $1 million for him. And he's grown massively and he's got some really cool people. But in that process, it was exactly what Morrad said. We were knocking on the doors of a lot of wealthy people, a lot of family offices, and having to overcome the, frankly, disbelief that there could be any impact, or two, any money could be made. And that's a useful case study. That was very, actually the most supportive people were those who had relocated to Africa. So it was usually Americans or UK citizens who were now embedded in Nigeria, Ghana, South Africa. They were usually the people who would knock and open the doors and get the principals to say, come back to the table, listen to what he has to say. The other, I guess, case study is a company called Okudu, which is a scale-up founded by Sudanese. And they have a storied history. They had delivered for the UAE and a bunch of other multinationals, but frankly, it was a challenge to raise the initial funds for them. And again, we went knocking on the doors of family offices, et cetera, and even though the story was right, the statistics were right, something wasn't there. And in the end, it was the personal relationships, and that's what was missing. And we were very lucky to have mutual friends who knew, again, the GPs of in my mind, two of the best funds in Africa, Launch Africa and Greenhouse Capital, who were able to get them to sit down at the table and take another look at the story we're telling. Nothing changed the story we're telling, and they pulled the trigger, and we were able to get them the funds they needed to start scaling up, which they are. So I guess the moral of the story, that was a long preamble to say Morrad was right. The entrepreneurs need to keep knocking on doors and building relationships. And then the government, I guess, can support that road where how do you allow the entrepreneurs to live, or not live, survive whilst they push that.
If I may add on this, we usually look at entrepreneur like people who build a product, okay, for a Yassir type or But when we don't look at the other side of the other entrepreneurship journey, which is the VC, actually, because they're also entrepreneur. And, what I always say to my VC when I talk to them and raise money from them, at least I have one idea that they can focus on and make a check, okay? Themselves, they have to sell a portfolio of ideas to other people, which is much more complicated because at the end of the day, they just look at previous investment, KPIs and everything, exit and stuff like that, and how much return they can do. So thanks God, I'm just a startup. Okay, so I should, sometimes, when I go at night sleep and I think about my brothers into the VC space, and I feel very sorry for them sometimes because it's not an easy space. But what I wanted to add on that is like, of course, we as startup try to raise money, and we go and you have to look at the partner VC as friend and supporters and partner, because if they believe in you, and at the end of the day, it's really like a long-term relationship. And what we see a lot is that the startup founder, they knock into 100 VC, and they kind of get really upset when they get a no, which we know actually when you're a startup, you're kind of born to raise no, to get one yes, So I go with the expectation to get no all the time. But what we build is a relationship. We have fun with the guys. We keep a relationship. We update with our deck. We come back for a social event or whatever. And I got from a one VC maybe 10 no's before I got a yes during my journey into my startup. So what I want to say is, like, of course, the ecosystem is here to help. People are here to put money into ideas. Everybody chases the money, and at the end of the day, what we want to ask a little bit more from the institution and the government is to kind of help out and double down this result by having a fund of fund and all these things. Those initiatives are taking place, and those things actually are really helping the ecosystem altogether.
So let's delve into some solutions. So we know that we have within Africa quite a diverse range of startups, from pre-seed all the way to almost IPOing, or actually going through that. So, we have a market of very, very different players. So what is the solution in terms of the funding problems that they're currently experiencing? Things like accelerators and startups help, regulation helps, but what else can we do going forward?
I have no idea, but
An honest answer.
I'll give you some ideas. I don't know. I think you have to cut the cloth to fit the man, and there are different solutions at different stages. So being sort of between Lagos and Nairobi, it's very clear to me that there's a bunch of capital which is very relationship-based in the sort of angel incubator, very early stage. And as you get a little bit higher up the development curve and the product curve for the different startups, you start to get this ambition that you want to bring in the more formal accelerators to bring things forward. But there's a significant gap between the development of the products compared with some other regions, and that sometimes becomes as a result of the lack of, and there's a gentleman here who does this very well, the application of the mentorship and experience from the training of these startups to get them a little bit more formalized and ready for the capital. And what we often see is that people are reaching for the capital but haven't really done some of the work to get that capital yet. And for me, that gap is what is sometimes disappointing for people and creates a delta that is hard to understand. But going back to something that you said earlier, consistency, right? Consistency, transparency, thinking long-term, thinking past the round you're raising for, building relationships, and thinking a little bit more outside of the physical space that you're in, thinking pan-continental, thinking pan-regional, thinking more internationally. Those are tools that I think are quite important for people to apply at whatever stage to make themselves successful in the long run. And I'm surprised it only took 10 no's before you got a yes, because sometimes it's 50, sometimes it's 100. But I think that persistence and consistency is quite important. And a lot of guys are sort of losing out that, especially all the Gen Z guys out there who are trying to start a fund.
And from a Nigerian perspective or from a local Africa perspective?
Okay, so just like the first panel, the guys that have worked tremendously on the Nigerian Startup Act, there are things that we got right? For example, back to policy, and I have a point about that. Tax incentives, right? A lot of tax incentives around the world are generic, so they don't work. Take a case study like Australia, right? It didn't work, but they went back to the board and said, what did we do wrong? right? They saw that the tax incentives were generic. They were not industry specific. So industry specific tax incentives, they work. Things like exemptions, right? On what's the word now? On capital gains from tax, right? These are things that can work. For example, tax deductions on capital losses. These are things that can work. For example, rolling over of capital losses. These are things that work if you can deploy it and deploy it right. So many people do not know. We celebrate India's venture capital startup ecosystem today. Look at the Fortune 500 companies. The CEOs are what? They're Indians. So, taking India as a use case study, what did India do right? So many people do not know. But the Indian government wrote the World Bank and said, we need your help. Support us in building VC funds. And the World Bank gave the Indian government some money to build 4 VC funds. And it's those 4 VC funds that has brought about what you see all over India today. Just 4 VC funds. So what can we do? I'm not saying we should write the World Bank, right? But these are things that we can do, right, to bring about this local investment ecosystem. Another thing people don't think about is access to data. I tell you, so many VC firms, global VC firms around the world, they would invest more in Africa if they can see data on the African startup ecosystem. So if I ask the whole audience now, how many platforms do you know in Africa that are bringing out data on the African tech ecosystem? I would just leave everyone to answer.
Yeah, 3.
3. Yeah. Now, don't call names. Brighter Bridges.
Yeah.
Africa the Big Deal. Yeah? Startup Blink. So the question is, before these guys, who was bringing out data about the African startup ecosystem? Second question, these guys we just mentioned, where are they based? If VCs do not see data, they're not going to invest. Right? They're not going to invest. So what do we need to see now? And taking Algeria as a use case, we need to see the government, the institutional investors, funding R&D, funding universities to bring out data on the African startup ecosystem. And in that way, the VCs say, there's money here. And what do? They invest because the funds follow data. Nobody argues with data. You argue with data at your own detriment. So these are things, It's on a board at Google's headquarters. You argue data against your own. So these are concrete things that we need to do. We need to start funding, tax incentives on R&D. And with that way, you see more investment coming into the ecosystem. Another thing is removing the bureaucracy. How easy it is to set up, to incorporate or register your business across Africa? How easy? In some countries, you can wait 6 months. 6 months. Is that ease of doing business? No. But give $500 to Stripe, and you have a Delaware C-Cup company. So come on. Come on.
So more digital nomad visas, right? To kind of unlock.
Yeah.
Sorry, I just wanted to add, in terms of informational, this is not free advertising, but TAKADAO, good publication. They have lots of figures. And there's a company called Survey 54 that is doing a lot of that stuff as well. Both are, one's a scale-up, one's a startup, both African-owned and grown. Just wanted to say that out there.
Very true, very true. And these are awesome guys. But you know, another thing that we see in the ecosystem, but I think is a driver, is fear of missing out. So take a use case, Paystack. In my opinion, Paystack is a unicorn, right? Do you know that Paystack, Stripe acquired Paystack, by the way? How many people know? Stripe acquired Paystack. Paystack is a Nigerian fintech.
200 million.
$200 million, thank you. Now, do you know what I'm saying? 30 local angels, 30. They put in about $1.3 million into Paystack. Guess how much? When Stripe acquired Paystack, $1.3 million turned to $30 million. That's like 1,440%. And next thing everyone now is saying, just like you said, what can we do for you? Take our money. What can we do for you? You're amazing. You're a model, right? But before then, what happened? Nobody was dropping any money. And now everyone wants to give money. So I think fear of missing out is also a driver. But now we can say in the global tech ecosystem, it's also a challenge. Because then you have more irrational investors that aren't doing their due diligence. They just want to put money. It's like a spray and pray approach. Like, hopefully, this is going to make me money. So now we're seeing a reset in the ecosystem, and now startups are going back to less irrational VCs that are now saying, look, I want to see strong business fundamentals before I give you my dollar.
If I may add something, we're talking about market like Nigeria, or, in my part of the world, KSA and UAE, where we have already some kind of experience with some early stage funding, pre-seed, seed, series A's and stuff like that, exit and stuff like that, and then the sprinkle effect, which is making people richer in the country and becoming themselves angel investor, okay? So that's amazing. But in those countries, at least we have a roadmap. Like if I'm a founder in Nigeria, when I come up with the ideas, I already have my pre-seed in my mind. I have my seed already scheduled. I have my Series A, and I have my B. All of it is already planned because I know exactly who to talk to already. And they have mashallah, this ecosystem already in place. When we look at Algeria, for example, if I want to look at Algeria now, today, is to build up all this and to learn from these nations where they build up a pipeline. Okay? When I was in Saudi Arabia, I launched my second venture, like 6 months ago. And alhamdulillah, we closed already a pre-seed, and we have already a pipeline. And I already have the seed, Series A, and I know who has the money. Because something that most of us forgot is that those funds that they mention and they announce, they're usually depleted already by the time you raise money in the next 2 years. So you see an announcement of a fund that has $400 million, but by the time you come, exactly. So they have nothing left. That's also the game that you have to understand and to communicate with your VC to know, hey, do you still have dry powder? So it is all this game. So look, we are the product for the start. We for me, I look at VC as the marketplace. They have fund, but they need product. If you don't have startup, they die. So sometimes it's kind of funny to say, oh, we have 10 VC. But if you don't have startup, what's the point of having 10 VC? Can you deploy 100 million, 200 million? Can we deploy in Algeria today 400 million? Do we have enough pipeline? Do we have enough startup? So let's, bring accelerators, inspire people to build company and stuff like that. Let's try to deploy this money. You don't have, it's a double-sided marketplace, guys, okay? So who is coming first, who's coming second? In that part, I agree with Oslo. We should go in silo in that kind of respect. For the rest, be on the gray line all the time.
I want to add something. And that leads me to what I want to say about, do we have the right startups? Do we have the right talents, right? Because regardless of the fund available, regardless of the dry powder available, if you don't have the quality pipeline of deals, right, that capital cannot be deployed effectively. And if you look at what is even happening globally, and it's happening to Africa, there's a talent shortage, right? There's a talent shortage. And most of the talents now we have in
Sorry, wait.
Yeah.
Jonathan disagrees.
No, get it. You want to go ahead?
This is not a debate, so I'll let you finish and let
Okay.
Debodun make his point.
So
But if you have a talent shortage in Africa, you're not looking in the right place.
Yes. So we're having African talent moving out in droves, right? Out of the continent, right? Tech about written about it, Tech Points written about it, Tech Points, the guys that you referenced, written a lot of articles about it right now. There's a talent shortage, right? And even in our backyard, we're having the big guys coming in and saying, hey, how much are they paying you in that startup? Oh, okay, we're going to triple it. And they're crossing over. So VCs would tell you that, look, we have dry powder, but we're not seeing the talent. And if we do not see the talent, what are we going to put the money to if they're not the right guys available to build the right products? Jonathan, what do you have to say?
I have a question though. Do you mean talent from the development standpoint? So the engine room that gets your products forward step by step? Or are you talking about talent from the ideas and leadership? And which talent do you think is really missing?
Software, development, engineering. Yeah, that's what I'm not.
Okay.
Yeah.
Okay, in terms of talent, of course, we have a big diaspora, first of all over Europe, all over the US. Top developers from Nigerian background, Algerian background, sitting in Silicon Valley or London. Okay, so the talent pool is there. Now is to bring them back definitely to the continent. And by the way, also the pool of talent in Africa, it's massive. The one of the few things that we do have beside resources is people and the youth. Actually, America and Europe are looking at as a prey, not for our resources, but the human resources. So we produce enough talented tech developers, and actually I'm building now on a Web3, which is blockchain, crypto, and Web3. And to be honest with you, the best talent now are in Nigeria regarding this. Okay, so why? Because they leapfrog the technology learning. So they were moving from mobile to nothing to mobile, and now they are moving from Web 2 to Web 3. So and for me, alhamdulillah, being in a region, I see Africa becoming the producer of the new generation of product. If we stop listening to what the West want to sell us, okay.
Shots fired. No, but we are seeing in Nairobi a significant amount of investment in the training ecosystem to get kids up the curve. Kids who come out of university with formal degrees are educated, understand how to learn, understand how to work hard, but aren't finding local and domestic job opportunities. So it's a bunch of different programs with big ambitions for training developers up. But one question I'd like to ask to you guys is, I've seen a lot of these programs spitting kids out, but the employment levels or the ability of these guys to get jobs after doing this, online self-taught course for 2 years, etc., the ability of these guys to get jobs is really, really difficult. And so how do we solve going from that to the next step, which is actually this character has the ability to develop a product, to actually add value, to be given a project and come out with solutions that actually work? Let me pass that on to Jonathan.
We finance more entrepreneurs to build more companies, employ more people, and create value. That's the simple answer. I just want to come back to Segun's assertion that talent is hard to find in Africa. It's not. It's there. You may have to retrain, reposition. As Morrad said, some of the best crypto Web3 engineers are in Africa. Play to earn, that kind of stuff. The really cutting edge stuff. Our youths are consuming it, learning it, and moving at speed. Why? They have no other option. They have no other option. But if they have access to a cyber cafe, a tablet, or a laptop, they're on it. They're learning. So I think there's a little bit of reprogramming we need as well. Like, if someone is going to offer your developer 3x to leave, you better find a way to keep him involved in your company, whatever that means. I have had this conversation with a good friend of mine who's CEO of a tech company, US, Nigeria, Kenya, and two of his best developers in Kenya, Nairobi, were working 2 jobs. And his HR found out and fired them. I think he fired the HR person for doing that, because from his point of view is they were his best performers. And if they were doing a second job and happy to come in earning 40% of what they're earning in their remote job, why would he let them go? So we need to reframe our thinking and, I guess, not be so limited. We have the talent. There are plenty of programs teaching young people how to be useful, how to learn new skills. And also we as entrepreneurs have to invest some time and effort to train our staff so they can be useful to us, and everybody will be better.
I would sort of add to your question, we need to start looking at things like internships and apprenticeship programs. We need to really start ramping that up, right, as a first protocol. The second one is, how do we actually get startups to actually, hire more local talent? That's another area. Another one is in academia or at the university levels. How do we then take the best of the best? And a lot of universities already have like little accelerator programs and little incubation hubs for entrepreneurship or startups to actually exist. But again, are they well enough supported throughout that life cycle, right? And what more can we do? From a local perspective. So with that, I think we're going to start rounding up the panel. It's been fun. We probably haven't covered everything that we need to. Any sort of, sorry? Okay. So just as an example, within South African ecosystem, we have a local government initiative called Westgrow, which is developed by one of our provincial states in Cape Town. That is an investment hub specific to draw talent, specific to draw startups to that particular region. And within the last maybe 2 years, they've actually done quite a lot. So it's not only boosted from a tourist perspective, it's also allowed more VCs and LP to kind of come set up shop within the Cape Town region. We've also seen more starting to come and headquarter within that region as well. So, we have different ways to tackle a problem, and I think from a government perspective, there's one. From a entrepreneur perspective, there's another, and from a VC perspective, there's another, and even from a regulatory standpoint. So I guess we need to find that sweet spot between all the 4 different worlds to kind of get to where we need to, right? So with that, I don't know, let's start with you. In terms of your one word that kind of sums up a problem that startups are facing at this point in time within the African context, and maybe then delve into some solution going forward that would work for that particular problem.
Yeah.
And that's to everyone, so start thinking.
Yeah, so it's natural just to end with the talent argument, right? Take, for example, what firms trained software developers and engineers in Africa? Can you mention names? Good. Beautiful. That's good. Jonathan? You go with the first person?
The Room and Andela are the two. ALG,
Good.
African Leadership Group, and Andela are the only ones that I've
So
seen.
ask yourself. Ask yourself.
TechnoServe, sorry, they've done as well.
What?
Go ahead. TechnoServe.
Good.
Yeah.
Thank you.
Actually, what is the music service?
Decagon?
Trace.
Good. So it's more of like a question to the audience. What do you think would have happened if we had no Andelas?
You've had no what, sorry?
If we had no Andelas?
Kids would get online, go to the Holbert School or École 42, whatever it is, and figure it out themselves?
Basically.
What do you mean?
Basically, these are the foundations of folks that trained engineers that we see around the world that Jonathan talks about, engineers that we see in the diaspora, right? And guess what? At some point in time, Andela had to re-strategize. Are you aware?
Oh, yeah, for sure.
Sure.
They had a total car crash in Kenya. A
Why?
total car crash.
Why?
Because of exactly what I just talked about. They trained these guys, they put them into companies, the kids didn't have the skills, and so they were getting really bad performance
So what
statistics.
happened? What happened next when they trained them?
They turned from being a business that invested in training people at the lower end of the scale to a business that ended up hiring out people who'd got 3 years experience. Totally
Yeah.
changed the model and lost the impact part of the development of the younger guys. That's what they ended up doing.
Yeah, because another thing they discovered was this is a global competition for talent, right? So the same way an Algerian startup wants a Nigerian engineer is the same way a Silicon Valley startup wants a Nigerian engineer. And the choice lies with that Nigerian engineer. There's no clause that says I can't go if they pay me better.
Can I just interrupt to make a point?
Yeah,
We need to take
again,
the same approach with
Exactly.
fundraising
Exactly.
as well, because we tend to domesticize ourselves when we think about fundraising.
Exactly.
If we're not domesticizing ourselves with talent, we
Exactly.
should not domesticize ourselves with fundraising.
Exactly.
I keep telling all my friends, get on the plane, go to Silicon Valley. I assure you, within 2 weeks, you meet 1,000 people who are going to put money in your business. It's a mentality thing. We shouldn't try and self-victimize ourselves for being on the continent.
That's one solution.
Sort of break open,
Good.
unshackle, decouple, and then go and do what you need to do. You know? So,
Yeah.
sorry.
Yeah, I mean, so we are going back to the fundraising as she was asking question, what do startups need in order to uplift the region, African region? And we can learn from actually Saudi Arabia. They moved from nothing. I remember going to Saudi Arabia and you were like a few years back, like 4 years back, presenting your company to a pool of investors and say, so I get 80% of your company for $10,000? That was the mentality. And it was like 3-4 years ago. Now when you go and you say, I'm raising 1 million, and you know what, I'm going to give you like 0.25% for you 50K, it's like, where do I sign? Today on WhatsApp is signed. So it's all about, to initiate and push the ecosystem is really a grassroots system. To be honest, I'm sick and tired of hearing a lot of the institution will come. Like I say, chicken and eggs.
Exactly.
The VC will come when there's money to be made, man. They are here to make money. So it's all about the grassroots education, teaching in school to embrace failure. I was a failure. Every school I went to, I could not pass. Every company I raised at the beginning was like very difficult, but I learned. I fell, learned, stand. So this is so if we can help, is really change of culture, especially in African, is similar to the Middle East, embracing failure, okay, and also making it like a statement to school to let young people join startup. And it would be great to hear, for example, Algerian taking an internship in Nigeria and South Africa. Yeah. Trust me, the guy come back in Algeria is building you Yasil times 10. So that's the thing that I try to, and trust me, when you build product and you see future of product, people are willing to write you check. I'm the first one to write checks if there's something going on.
Yeah, so my parting shot basically is we need to basically invest in capacity building. Part of our work at Fund the Gap, so back to the talent argument, part of our work at Fund the Gap, we partners with the Microsoft African Development Center, right? They built one in Kigali. I think they built one in Nigeria, a $100 million facility. So we're partners to the Microsoft African Development Center, and that's a huge debate. We are running out of engineers, and very soon, if we don't sort out, we invited everyone from around the world, and that was the debate, right? And we all agreed that there is a shortage of development and engineering. Come on, Microsoft, right? For Microsoft to come out and say this. But what we're doing as a solution is, through our partnership, we're training 5,000 engineers and developers nationwide, right? The next ones, equipping them with the resources, the tools that they need to come in. So rather than just complain, we also are part of the solution. Yeah.
2 mics. So I'm going to cheat, and I'm going to go with 2 words: network and information. So not the obvious ones. I feel like it's so important to have information, and the person with the most information wins at the end of the day. Knowing who is who in cuckoo land, as I say, you should know who everyone is, everyone on the panel. Do you know who they are? Do you know their name? Are you connected on LinkedIn? Do you know their story? Do you know what they do? Even everyone in this room. Every conference you attend, every article you read online, just to have that thought process to try and make sure, okay, I know what this founder does, I know what their business is, I know what this person's role is in the ecosystem, and then you start to build up your own picture of the ecosystem. I find that a lot of people in the startup space have their own version of what the ecosystem is, and there are a lot of faces missing. And there's a lot of people they don't know exist. And that will always be a work in progress. I don't know everyone. Most of you here will say you don't know everyone. But if you make it a conscious thing to network and to have conversations with everyone you meet, regardless of where they are in the ecosystem, you find your degrees of freedom, separation from the money, which is what all the startups do need, is the money. But you get there through the network and the events that get put on. So just having that conscious mind to extract as much information at all the different levels, it just makes a big, big, big difference, whichever country you're in.
I'll use Debodun's formula. I'll do 2 words. First is obviously cash. Those who have should think about being angel investors. And to be an angel investor does not mean hundreds or tens of thousands. It can be as simple as a couple of $1,000s, or more importantly, taking a risk on someone in your network and give them access to do a small project, something so they can prove. Social proof is very important. And that's something people can do for very little risk. And I guess the next thing I will say is, again, network. Can you introduce someone who you believe in to the rest of your network? Can you take a flyer risk on a service or a company that's locally and see how it does? Can you spare an hour or a month to mentor someone young? Well, actually, age doesn't mentor, to mentor someone in the field where you're an expert in and create some value. So those 2 are basically the same. So that's me.
Okay, I think I've said enough, but sorry, is this word supposed to be something to do with the fundraising? Because what Jonathan said had nothing to do with fundraising, so I'm just trying to... Okay, no, I think my word is essentially global, and I'd like both investors locally and startups locally to think in a more borderless fashion about the trends that we follow and the models that we pursue, and not to believe that we're on an island here in the continent, but we're actually part of the global race, and so to take best practice from everywhere and apply it here, and I think we'll be successful. That's essentially my word.
My two words, is launch now, don't wait for entrepreneur. So, and small angel, everybody could be an angel, start writing checks, and please, Hukumat Jazairi, just double down on the check. That will give a good way to give at least a 3 months, 6 months run rate for a startup to get the next round. So a small check from the helping double down on angel electoral group from the government aspect is also very appreciated, because that really helped the ecosystem. Because if the government trusts as well and support the ecosystem, basically this ecosystem will build itself. So there is no. So, thanks.
Okay, so my 2 words, since everyone was going with 2, is probably flexibility, and that goes to the whole ecosystem, right? Flexibility from a regulatory standpoint, flexibility from investors, flexibility from entrepreneurs, because that's something that kind of really lacks to some degree. And my second word is relentless. So, being relentless in your idea, in your pursuit, be relentless as VPs to actually seek out those that are absolutely well-deserving and talks to your sort of thesis. And again, from governments, be relentless in terms of supporting. Again, I think we're in a situation where the tides are turning, right? We've almost coming more into a somewhat more mature market within the African context, and we have that opportunity to kind of really take a lot of the past lessons learned and kind of take those things forward, but also in the same breath allow ourselves room to innovate, right? So yeah, with that, I guess this draws to a conclusion. Any final words from the panelists? No? No? Really, guys? Are you speechless? Okay, awesome. But thank you, everyone, for being here, and thank you for attending, and thank you to all the panelists.